What's up everyone? So I'm going to be making this video for those who trade ES or NQ. So I'm going to be breaking down an ES and an NQ setup you could have taken, right? So I trade ES, I've been trading ES for a long time now. So what we're looking for here is before you dive into price, you need to know where you are positioned in the daily candle. Where are you positioned in the day? Where are you positioned in the week? Right? So we had this huge London sell-off and I just want traders to understand this is the Asian range. And this is the daily candle. So you can see we're significantly below the daily candle. And we see that because this is the daily opening. We're all the way down here, right? So how do I use this? How do I interpret this when I'm trading, right? So what I'm waiting for is I don't trade before 9:30 Eastern, but I do have my key levels marked up, right? So key levels are basically 15-minute fair value gaps. So I want to be trading from one key level to the next. It's that simple. So when I trade key levels, I am looking typically at the candle before the fair value gaps, right? So here we have the gray box is a 15-minute key level, and this is the fair value gap, right? Specifically, what we can see is we see this candle and we see this candle, right? So we see the fair value gap over here. So this to me is a key level in price. I want to see price come into the gray box before I take any positions. Now, we see the same kind of thing happening over here where we see a key level over here. So the trade itself was kind of short-lived, but I'm going to be breaking down how you could have taken a break and retest from here. So if you're a trader right now and you're suffering with any of the following psychological problems, if you suffer with FOMO, overtrading, if I can spell that right, FOMO, overtrading, and revenge trading, right? There's a very simple solution to go from being problem aware to being solution aware. There's a very simple way you can get over this, and it comes down to choosing an accurate key level. So a key level is where you want to be trading from. If you have an accurate key level, and we're going to define what an accurate key level is. If you have an accurate key level and you wait for price to come to that key level, you can avoid 80 or 90% of your losses. And so what makes a key level? PO3, so we're below the daily opening price. It has to leave a 15-minute fair value gap. I don't like to use 5-minute fair value gaps or 1-minute fair value gaps. I like to see a 15-minute fair value gap. And also you only want to be trading inside of your key levels between 9:30 Eastern to 11, right? So there's no point over trading past 11 a.m. Eastern. So once you have a key level with PO3 and a fair value gap, you're just waiting for price to hit that key level, right? This is the simplest way you can avoid over trading. So when we come into the level, we want to understand what was going on here, right? So we've had choppy price action since around 10:15 Eastern, but we're going to be focusing on the small base hit you could have taken from here to here. And so the way that key levels are formed, right, the way you can capitalize on a break and retest from this area is by understanding that every break and retest forms in the same way, right? So here, if I draw this underneath, once you have your key level, what you're looking for is for price to break above the key level, retest the key level, and then take the trade. This is how simple it can be. This is how simple trading can be if you simply understood what was going on inside of key levels. So this is what we're interested in, right? We're looking for a rejection. So people talk about reversal, people talk about rejection, people talk about all these things, but they don't back it up with true substance. So how did I know price is going to reject from this area? And why did price reject from this area once, reject from this area twice, right? What makes this a key level? What makes this a support zone, right? What makes this a bullish fair value gap you want to be buying from? Because we do have a bullish fair value gap just over here, which I'll label in blue, right? So when you see a bullish fair value gap or you see a key level, you want to see if buyers are in control. So it's a simple recipe of understanding aggressive sellers fail, which means that passive buyers absorb the sellers or the aggressive sellers, right? So this means there are buy limit orders resting, right? Buy limit orders resting are what makes this a valid setup. So if we go to the footprint charts now, I'm going to be breaking this down. So what makes an A+ setup isn't the entry itself, it's understanding why you took the entry. So I speak to a lot of traders who don't know why they buy and sell. So this is the entry I took today. So at 66.3, stop loss just below 66, about 57 area. So you want to know what's going on over here, right? So when you see price breaking and retesting, when you see a retest, the reason a retest works is because there's been an absorption of sellers to the upside, right? So when you see a retest, what's actually going on is buyers are stepping in this region. Now, when you go to the candlestick charts, there isn't much you can see here, right? You know, trading key levels or trading fair value gaps without the order flow is not a viable strategy in the long term. Now, if we break down some of the numbers we saw on the footprint charts, we saw, I'm just going to break down some of them. So 383 for 76. So that's the first thing we're going to go to, 383 for 76. Then we saw 271 for 29. 271 for 29. And then the last number we saw at the bottom was 28 for 0. Now, what do you notice about all of these? What do you notice about all these numbers? So what you can see here is, I'm just going to put something at the top, right? This is the bid on the left-hand side, and this is the ask on the right-hand side. Now, once you know this, what you can begin to calculate is the fact that the bid is aggressive sellers and the ask is aggressive buyers. So for each of these, you can calculate a delta. So in this case, I'm just going to write here, delta for the top bar is roughly 310. I'm just giving rough estimations here. Delta for the second one is going to come out to be 250-ish. And delta for the third one is 28. And so what does that mean, right? What does these three numbers mean, right? So when you're taking a buy trade, when you want to execute at this level, so my execution was just above this level, what does the order flow, what does price action tell you? What's going on in this region, right? So what's happening here is we see a lot of aggressive sellers, right? All across here, we see a lot of aggressive sellers, right? In this box, we see a lot of aggressive sellers. Now, were these sellers successful? Even if you look at the order flow. So what happened here is we had a bullish fair value gap, which sellers were not able to reclaim, meaning sellers were aggressive, but they were unable to break below this fair value gap. And certainly they were not able to break below this level. So when we see the market breaking above the key level, this shows you that aggressive sellers have failed. And this means that passive buyers are in control. So what's really going on here? A lot of traders think there's more sellers than buyers. Well, that's not the case. In an auction, that can never be the case. So when we see more aggressive sellers, and they're unable to break below the level, they're unable to break this fair value gap, what's really going on is passive buyers are present, right? So passive buyers are the ones responsible for breaking price above this level and breaking price up to this specific area. So if you're a trader, you want to start breaking down your key levels in terms of buyers and sellers, not patterns. Yeah, so when we come into a key level like this, there's only one or two things that can happen. And we've been through this countless times. I've been through this countless times. So we can either hold to the downside, or we can break and then hold to the upside. Now, the thing is with either entry, you don't enter at the first break. So there's no entry here. Where you really want to be entering is the retest with confirmation. So there. Likewise here, you don't enter at the first break, so I'm just going to write here, no entry here. What you're really looking to do is enter here, all right? Does that make sense?
So you're entering on the third break for the bottom one, for the selling, right? That's the third one?
Well, okay, these are two separate ones, so let me make it less confusing. So obviously we had a buy trade, so what I'm trying to say is you don't enter here. You wait for the correction back into the level and then take the retest. Does that make sense?
Perfect.
All right.
Now that one does, yes.
Okay. And that's what I'm going to break down with you over here. So this is the setup from today. It's an A+ setup. The market just didn't play ball, right? It's just one of them things. We can't control that. We can only control our setups. So this blue box is the key level. So what I want you to focus on, this is why I found this setup so interesting, and I wanted to highlight this to basically anyone who I speak to this week, right? So this candle here is interesting. What do you think stands out to you in this candle?
Let me see. I can't really tell who was in control. Oh, that's green. Okay, I'm sorry, I'm colorblind.
Oh, sorry.
So yeah, there's aggressive buyers, and it kind of pushed the price up a little bit, but not much, right?
Okay, so can you okay, I sorry, I didn't realize you had the color issue. Can you see what it says here? Can you see this red
1A404. So that's the candle that the sellers were more in control of, right?
no, that doesn't mean they're in control. Remember, what does 1K for 404 represent?
More bids than ask.
So the bid is greater than the ask. So what does the bid mean? Let's recap this a little bit. What does the bid mean?
More sellers are present.
What type of sellers?
Aggressive ones.
So there's 1,000 aggressive sellers, and there's how many aggressive buyers?
404.
So if the market moves, okay, so are there more aggressive buyers than sellers at that price?
Yes. More aggressive sellers than buyers.
So you can see here the market's actually moved up in that candle, and we peaked above this level. So we broke above the level here and made a confirmed break over here. Can you see that?
Yes.
So what does that tell you about these sellers? Have these sellers been successful or they've not been successful?
Non-successful.
So who is in control of the price at this level when we break? We're just looking at the break. Who is in control?
Passive buyers.
Passive buyers, perfect. So it's telling you at this price point. So this key level was basically 66. So 66.63 to about 66.55. So it's around about this area. So this key level, so 66.63 to about 63.50. Well, 63.60 to 63.60, round about this area. There's
a key point from your 15-minute fair value gap?
Yeah, that's the POI that we went through right at the start. The key level, remember?
Making sure it's a 15.
It's the same thing, yeah. So now we're just now we're looking for the interaction between buyers and sellers inside of the key level. So it's exactly what we went through in the last session.
Perfect.
It's the same thing. I'm just going over in a bit more detail. So when you see 1K for 404, that means that, explain to me in your own words what that means.
That basically means that the sellers, aggressive sellers, try to step in at that price action to push the price down, and they failed miserably to the passive buyers. The passive buyers were able to get those guys, aggressive sellers, out of the way and go up with the price.
Perfect. So remember what you said last time. I think it was you that gave me the phrase, who's hanging out here?
Definitely the passive buyers.
Perfect, yeah. So this is the break. So this break, so I'm just going to write 1K for 404 back on TradingView. So in this case, right, so if I make this a bit clean, what you saw inside of the level was this. You saw 1K, I'm just going to write 1,000 for 404. Now this shows us what you correctly said. Now, if I were to say to you, what is the delta? How would you answer me there? What is the delta for this specific price action we're looking at?
Just for that price action, not for the whole candle that price action was in?
Yeah, no, just the specific two numbers I've given you. What is the delta there?
Oh, negative delta.
Yeah, so it's basically 404 minus 1,000, right? So that is around, just rough figures, it's around minus 600. Can you see that?
Yep.
So just to show you on...
Yes.
So just to show you first through a schematic, aggressive sellers hitting the bid, they fail through this up movement. So it shows you passive buyers are hanging out in this region. So the break is being supported by passive buyers. Does that make sense?
Yep.
So if we just go to our candlestick chart, what we're looking for here is we're looking at this region here specifically, but also we see this break. So these two areas, which I'm going to highlight in yellow, these two areas are showing us passive buyers are stepping in to the markets, right? Passive buyers are stepping in here. Okay?
Okay.
Now we're going to focus on the retest, which sometimes there's multiple candles. Today there was only one candle retest, and the entry was here, stop loss below here, right? So let's now go to this yellow box. So this yellow box, let me get rid of these two. So the yellow box that we're going to focus on is here now. Yeah, so this one. Can you see this? This is quite unique. This one.
The one that retested with the wick.
Yeah, yeah. So what's interesting is we break above this candle, but what was going on inside of this candle?
So inside the fair value gap, it shows that the aggressive sellers were pushing or trying to push price down.
Did they succeed?
No, so the passive buyers really stepped up.
Absolutely. So there, what was going? Absolutely. So what was going on is there were passive buyers here, or as you say, they were hanging out, and the passive buyers were also hanging out here too. So what we've done in today's session, which is that's kind of what I wanted to cover before I give you a homework. What we've covered is the key. So remember we started off with a 15-minute key level over here. Remember this at the start? It's a bit messy now, but remember this at the start.
Yes.
This is what we've dissected here. So everything that we went through at the start, we're just dissecting what was going on inside. So passive buyers were propping up here. Passive buyers were propping up here because aggressive sellers failed, and that's what we saw over here. Okay?
Yeah.
Alright, okay, I'm just going to stop the recording because that was